And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And as always, this is the show where we bring you where the action is in the broader markets, new highs for the indexes. And we'll take a look, of course, at that. Beneath the surface, there is sector rotation shaping up. I do want to share that with you. And then also, let's take a quick look at some of the headline news that drove price action last week. Certainly most impactful was on Wednesday when the Federal Reserve, Fed Chair Powell, talked after the FOMC's latest meeting. And in his notes, it was cited that the Fed is still anticipating at least 3 rate cuts this year. And that was a huge relief for investors, given that we've seen an uptick in inflation. Now, next week, we may see the tune changed only because we have core inflation data due out on Friday. That's going to be that core PCE data that the Fed really watches very closely. And in an unusual move next Friday as well, after that report is released, Fed Chair Powell will be speaking. So could see a little bit of wobbliness there, depending on the numbers and, of course, any comments from Fed Chair Powell. Also, last week, we got some very bullish data surrounding home builder confidence. It reached a new high since last July. We also did see housing starts rebound to their largest number in 9 months. And we did have now that news relative to interest rates. So lots of backwinds for that particular area. We'll get into how you can participate in that move. And also last week, we did see leading economic indicators. They posted their first increase in 2 years. So in essence, we are seeing economic expansion. We'll talk about that as we take a look at some of this sector rotation that's taking place. So let's go ahead and take a look at those broader markets and see where we closed for the week. And here we are. This is a daily price chart of the S&P 500, a healthy 2.3% rally. We hit a new high into the close yesterday, retained most of that today, a very minor pullback. And we can see with that price action this week, we had this nice base breakout over a 2-week period of back and fill. And this is what the market needed in order to potentially set up what I call a platform to allow the markets for another leg up. We have a positive RSI, positive MACD as well. So the near-term uptrend still very firmly in place. From here, let's go ahead and take a quick look at that Nasdaq Composite, up a little bit more, certainly 2.9% advance. We did pull back below this 21-day simple moving average going into that FOMC meeting notes. Nice recovery. And again, uptrend very much in place here with the Nasdaq as well. Now, from here, let's go ahead and take a look beneath the surface. We want to see what is taking place in those sectors. And here we are with those 11 S&P 500 sectors. RSI indicator has been added to this daily 2-month price chart view, and it's sorted in descending order. With an update here, I will share with you that the energy sector remains up here at the forefront despite underperformance last week. The relevance here is that this sector movement from these stronger sectors up here at the forefront relative to these weaker areas is going to be very nuanced. It's not going to be a whippy, strong, and then suddenly weak. So we do still have energy up here at the forefront, and then also industrials. Now, industrials are outperforming, and I will share with you why, but it is a very robust area. Let's just take a quick look at this industrial ETF, and you can see that we had that nice uptrend that began in the beginning of this year, very firmly in place. We'll get more into that as to why. Basic materials up here at the forefront. And as we move through XLC, communication services was the top performing sector last week. Everything to do with these heavyweight names. If you follow my MEM Edge twice weekly report, you'll know that we had been highlighting this base building activity almost 6 weeks on the lookout for this leg up. And here we are. And also from there, my report does share with you names poised to benefit from that new uptrend. Moving on, taking a look at some of these weaker areas, healthcare has been weak here for a bit. We can take a look at it hitting a new high at the end of February. So a 3-week period of base building, and really what you want to see as it potentially can form this period of back and fill and allow for another leg up. Although healthcare is a bit more defensive, we are seeing moves into other areas of the market. Most notably here, we can take a look at technology, which also had been waffling. Lots of volatility in this space. Apple's certainly a major component, and they've been having their difficulties. And then elsewhere with some sub-industry groups that we'll get into. But again, nice back and fill price formation shaping up there. So let's go ahead and move beyond these broader sectors and take a look at sub-industry groups within those sectors. And again, a 2-month daily price chart view, and take a look. No surprise here. Homebuilders front and center up almost 5%. And this is an ETF that I talked about back here several weeks ago. XHB is the Homebuilders ETF, a great way to play the advance if you are not inclined to dig in and uncover that winning stock, which my MEM Edge report has done. We do have the top performing name on our MEM Edge report that we did put back here, and it is still quite strong. So use that link below if you want to take advantage of that nice continuation move that's shaping up there in these home builders. And then also up here at the forefront, another area I've been covering very closely, and this is XRT, the S&P 500 retail ETF. A lot of retailers reporting their numbers, and in the end, mostly bullish price action. We can take a look at this nice move up here. This is another ETF that I added, and I do believe I spoke about it back here as well as it came into favor. Nice continuation rally this week. And from here, let's go ahead and take a look at some of these other sub-industry groupings that are on the move. Semiconductor stocks recovering from a pullback here. But I will warn you, it is very selective as it relates to those semiconductor stocks that are participating or, more importantly, outperforming. And of course, we can point to NVIDIA, but there are 2 other names that are on my MEM Edge list that did outperform last week. So moving through, you also want to be aware of some of these areas down in this lower quartile. Most importantly, make sure you're not overweighted. We did see software stocks come back into play last week. There are over 300 software names that are publicly traded. And this is another area where selectivity is going to be important if you're going to dig in and uncover those outperformers. But by and large, the overall group is in an uptrend. Let's take a look at yields. This is going to be a very critical, of course, component in these markets. So this is the yield on that 10-year treasury. And you can see throughout this past week, we are seeing a general decline take place. And we are now at 4.2% on that 10-year. It is still relatively elevated. At the very least, it's heading in the right direction. Next week, of course, we may get more by way of guidance depending on those core inflation data points. Now, from here, I did mention that I was going to dig in a little bit further as it relates to sector rotation within the markets. And so what I've done, and this is something I know that I've shared with you, again, going back about 6 weeks ago, how to use these ETFs to guide your investments and also to guide where you may want to put more energy as it relates to groups moving to the forefront. So a number of ETFs here. And again, I have this candle glance 2-month daily price chart view. And this is something you can easily set up on your own by giving your given list a name and then sorting it by this RSI in descending order. Of course, any portfolio as well, super helpful. So what I've done here is, again, really presented a fairly varied ETF view here. And up here at the forefront, you can see without knowing these tickers, but I will share with you, for instance, IEO is the oil and gas. We talked about energy stocks. DBA is going to be the agricultural. And then natural resources. We talked about basic materials up there at the forefront. So let's go ahead and move through. Industrials are here. And then also XES is let's just take a look and confirm that. Yeah, that's going to be still energy related. But in essence, what we are seeing is those sectors that are up here at the forefront, XLB, the home builders, and then we also have another ETF up here that's been really faring well, PAVE, that's infrastructure development. That's going to be all about industrials. So my point here is that we are seeing vibrancy in industrials and materials. Let's take a look at one other area on the move higher, ITA, aerospace and defense. And I did just add a stock last week from this industry group to my MEM Edge report. Essentially, what is shaping up here is the fact that we are seeing a movement into these cyclical stocks. And it's very common when we are in a period where, for instance, leading indicators, there are indications that the economy is in an expansive mode. And with interest rates on the move to begin to move lower, potentially as soon as June, you are going to see a move into higher yielding stocks in areas of the market. So all of that is going to be quite relevant. Let's go ahead and take a look at some of these other sectors that you might not really be aware of, but that is the global water ETF. This particular one within financials is going to be insurance stocks. Now, they've been on the move, no doubt. But again, they are a higher yielding area. It's an area of the market where they've been able to raise their rates, and there's not much we as consumers can do around that. And then one other area I wanted to share with you is JNK, and this is the high yield junk bond ETF. So two things this particular, any move into this area could signify, and that first is going to be more of a risk on with these lower grade bonds coming into play, but also that high yield aspect. So we are seeing, this is something I spoke about in my MEM Edge report several weeks ago, anticipating a move into higher yielding areas as these rate cuts come into focus. So one other area that I did want to talk about is when you see these groups that pull back and then you want to have a system or a way to tell that the group is coming back into favor. And I'm on the lookout for instance, JETS. Now, this is the airline, another area, cyclical, that does well when other cyclicals begin to move, but also we did get a couple of pieces of good news with airlines last week. And we can see this downtrend reversal that took place with this MACD crossover. And when is it safe or okay to get back into these names? So what I'm going to share with you is taking us back to an article that I posted last Friday. You can access it under this articles tab, and it was all about downtrend reversals. And I'm going to share with you the one stock that I spoke about in that articles, and you'll have really some tools to work with. And then also I'll share with you a downtrend reversal that did not shape up and why. So here we are with ON Holdings. ONON is the ticker symbol. And the stock came out with their earnings report. And this is taking us back to March 11th. And you can see this major gap down in response. And from here, let's just go ahead very quickly. And I will share with you a daily price chart to give you that extra element so that you can review what took shape on that gap down. So here we are with the company's release of their earnings, gap down very, very significantly down to this 27 level. And then buyers came in on that dip. But let's take a look, 15-minute price chart of ONON. Here we are on that gap down in response to earnings. And I'm going to share with you the characteristics for an intraday chart. I don't use this very often, but it can be quite helpful in spotting these downtrend reversals. First up is you want to see the stock close above the 5 and 13 simple moving average. You want to combine that with an RSI that turns positive up above that 50, and then have that MACD crossover shaping up and eventually moving into positive territory. Now, from here, relative to its price action beyond, one of two things that you can do once you get that downtrend reversal shaping up, go ahead and convert and revert over to that daily price chart. So here we are with ONON, and this is the price reversal that took place. So we are now following that gap down in price. We do have the stock eventually closing above its key shorter term moving averages and into an uptrend. In other words, you can drill out from that intraday. You've seen that downtrend reversal shape up and post positive price action, and the stock continues on. Now, from here, let's go ahead and take a look at a stock that also gapped down in price, but did not experience a bullish downtrend reversal. We're talking about Ulta. This stock came out with their earnings at around the same time. So here we are with ULTA. Here's that gap down in price. And what shaped up the following day is the stock did move above this 5 and 13 simple moving average. However, we did not get that bullish crossover of the RSI into positive territory until the following day. However, we did not have a follow through. Now, this is where that daily chart is going to be quite instructive relative to uncovering whether the stock has in fact reversed its downtrend. ULTA on the daily chart did not get back above its 10 and 21 day simple moving average, and then has since deteriorated so that on the daily chart, it's clinging to its 50-day simple moving average with a negative RSI and a negative MACD. And everyone, that's it for this week. I hope you have a great weekend. I'm going to look for you again here next Friday.